Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Wednesday, April 27th, 2016. Well, it's Fed Day, folks. Markets have been on a little bit of a whippy, winding road today on an intraday basis. Take a look at the spiders. This is today, folks. Each candle is 10 minutes long. So here's where the day started, and you can see we opened a little bit lower, surged up, and then we started to fall, and we fell pretty sharply into a little bit of a support pivot point right here, at which point we got a nice bid in this market, and we're floating back up. Why did the market roll over here? Very simple, oil. All right, so many people would say, oh, Apple's getting crushed today, which is true. Don't get me wrong, that is true. But the fact of the matter is that Apple has actually moved higher here over the last, really since the start of the day, opened lower and has just floated neutral to higher. Big resistance coming up right here on the 20 MA, which is sloping down. But bottom line is it's been oil because oil sold sharply here on inventories. Oil gapped higher. And then, again, that was cushioning the market earlier. Even though Apple did have bad results and obviously took the tech down, we have seen oil roll over. And then as oil bounced, you can see this bounce in oil is allowing the spiders, the SPY here, which again is the S&P 500, to float back up. Now, you might say, well, that's a big move up on the spiders for a relatively minor float up on oil. The answer is yes, it is. The reason, look at the volume today. So light volume means that any sort of factor or catalyst will have a bigger impact to the upside. In addition, you have to remember we have the Federal Reserve today at 2 o'clock, and the markets are anticipating dovish chatter from Janet Yellen. So those factors right there are enabling this market to float up. Now, it'll be interesting to see here because I'm in the camp that I would not be surprised if the comments from Janet Yellen, Federal Reserve President Janet Yellen, are a little bit more hawkish. The reason why I say hawkish potentially, and not overly hawkish, just a little bit more than last time, the reason I say that is because there has been some key economic factors that have changed since the last meeting. For instance, we saw another 200+ thousand jobs created last month, and we're almost to the next report for April in early May, and we'll see about that, but my guess is we have created another 200,000 as well. In addition, the biggest factor that Janet Yellen has pointed to keep interest rates from moving higher has been global economic growth, and again, the lack thereof, essentially. And we've seen China report a couple economic numbers that have been better than expected lately. So I wonder if she's not going to start to kind of open the door for a rate hike. Not this meeting, don't get me wrong. Nothing's happening in terms of interest rates this meeting, but is she going to open the door verbally for a potential rate hike maybe in August, maybe, something that tells the market it is coming down the pipe? And we're going to find that out later today. So that'll be very interesting. But you have to marvel at this market. I mean, if you look at the QQQ, right? The Qs, which is the NASDAQ 100, essentially the NASDAQ. I mean, the Qs have been absolutely annihilated from these highs. On Google, earnings were horrible. We've seen now, obviously, earnings from Apple, very poor. Many other big names just getting absolutely crushed. IBM got crushed on earnings. But the NASDAQ itself, the QQQ, has fallen pretty precipitously from basically almost 112 down to a low today of about 107, just underneath 107. But the S&P, I mean, if we go to the S&P here, let me bring up the daily chart of the S&P. I mean, we're just right off of the highs here. And this is what tells me that this Fed meeting is going to be a major, major player here. We're either going to break out on this Fed decision or we're going to have a big fall. And the reason you know this is because take a look at this trend line right here. Look at how we're hovering right at it. All right, do we break through? In which case, if we break up, minimally we're going to 212, and I even think that there's a chance to go up to 214 here, this pivot high up here. But if we don't and we start to fall, and you do have a little bit of a bearish inside bar pattern here, the S&P literally could fall within a couple days all the way down to about 200, 201-ish area here, 50 and the 200. This would be your first huge support. There's also a gap fill just below 200 right here. So again, this is going to be a very pivotal Fed meeting, and I think we all need to be watching very closely. Depending on what the Fed says here, not only are you going to see a reaction based on the comments, but then the dollar is going to react, which is going to cause oil to react one way or the other, gold, silver, all commodities to react as well, plus obviously the currencies which play into the dollar, yen, and other factors that have been very important to this market. So anyways, bottom line is, folks, 2 o'clock today, huge, huge for this market. And I want you guys to make sure you're on point here because, again, it is going to be a pivotal announcement, I do believe that you're either going to have a move up to probably as high as 213 maybe on the spiders, not today alone, but within a few days, or you could see a fall within a couple days as low as 201, 202 here, maybe as low as this gap fill down here to about a 200 Pierce. All right. So bottom line is we're trading it. We're making money off of it. I just closed out an options trade today. Some puts on Alibaba, made about 50% on those. In the money stocks is the place to be because there's constantly trading activity. Doesn't matter if the market's going up or down. There are options to trade, and that is what we are doing. Come join us here at inthemoneystocks.com. Profit with the